Hello traders, Gary Wagner here. It is 12:42 in Honolulu, 5:42 in New York on Wednesday, 20th day of December, 2023, and this is the daily report for gold and silver. Traders, we had a stronger dollar today, largely responsible for the decline in gold. Gold, based on the most active February futures contract, is currently down $9.40 and fixed at $2,044.40. The dollar gained 0.31%, taking the index to 102.425. Lastly, silver had a strong gain of 1.27%, or 31 cents, taking the most active March contract to $24.63. We did move our stop up today to 24.02. We'll discuss that during the technical studies section that begins now. We are currently flat with no active trades in gold after being stopped out on Friday last week. That's this large red candle here. We can easily see that it moved up on both Monday and Tuesday, down a little bit today. I do believe that there is strong support at approximately $2,000. That would be based on that key psychological level, as well as these lows that came in just below that. Major support, and I don't believe we'll see it test this area, comes in at around 1960, and it's based upon this cluster of moving averages, as well as these real bodies that occur right here. I think that as we get closer to the holiday season, which will officially begin next week, traders are waiting to see what the PCE inflation index shows. That will come out on Friday. It is forecasted to come in slightly below the numbers in October. If that's the case, it would strengthen the hand for the Federal Reserve to cut rates next year more aggressively than they originally stated, which was that there would be 0.75% cuts, or a total of 0.75% coming off of Fed funds rate, which currently stands between 5.25% and 5.5%. Optimism surrounding a much deeper rate cut up to about 1.25% have been prevalent and have been highly supportive of gold pricing. And I think that as long as it holds above 220 to approximately 230, this is the 21-day exponential moving average. I think it could hold here. If it does break down, I do believe it will find strong support. We will remain flat unless we get the kind of dip we are looking for, which would be a return back to about 2020 before entering our trade. As I said yesterday, we've had a strong last quarter, a very good year, and I don't want to rock the boat, so to speak, unless I believe there is an exceedingly high probability of a successful trade. Between Christmas, holiday, and New Year's, I would expect a lot of traders to be absent, thereby reducing the volume. We're already seeing a reduction coming into that. It is Wednesday, so we officially only have 2 more trading days. Monday, the markets will be closed, of course, in observance of that holiday. And then we will have next week, in which we'll have New Year's Day also fall on a Monday. So we want to be careful. Traders, we are looking at the continuous contract of silver futures, now representing the most active March contract. As I said, that gained almost a full percentage. You can see that as this good size green candle following yesterday's dramatic climb. As we talked about yesterday, the first hurdle we wanted silver to overcome was to effectively trade and close above $24.38. That corresponds to the 38.2 Fibonacci retracement. It did that eloquently today. And all things being equal, I would expect, if silver continues to move higher, for it to at least challenge $25 per ounce, and that is our new target. We did raise stops slightly, 24.02 from 23.90. All silver traders should now have their stops at 24.02. I'm probably going to look to take that stop a little bit higher, just under today's low at 24.27, just prior to recording tomorrow's show. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.